Hi everyone, in this video we're going to go through the onboarding. So I'm going to do it with the app so that you can see exactly how to use the app, but to be honest there are a lot of features here and each feature answers a question, and so maybe another way I could do this is not take you through the onboarding but ask the actual question like what is the best time to buy this specific stock, and then how to do the analysis with the app, or things like this. Anyways, and maybe when I do that, I can also show you how the AI works by explaining, for instance, which features come into account when you need to answer a specific question, like what's the best time to buy this stock, and how to assess whether another opportunity is better, and so how maybe start with an easy thing where I start with one feature and then show how by adding up features how the AI works and how you can get to the best decision. So like how the space works with one feature versus 3 or versus 10, and maybe even go through some techniques that are used to. Anyways, I'm going too far right now, but let's start with onboarding. So the onboarding, why am I going through it? Because a lot of questions have been asked already. Everything is more or less organized in the onboarding. I think everyone should read it. I know that some people don't really like to read, or maybe they like to get some visuals. So fair enough, let's do it with some visuals. I'm going to go first through all the sections and then go in details within each section. But before I do that, just the first section I'm going to go in details, and you're going to understand why, because it's a bit an introduction, so maybe it's easier. I will leave the starter slides for now. You can review it yourself. It has screenshots and everything. But let's start with the getting started section. If I just look at the first part, a beginner's guide, it tells you basically how this works. There is a signals tab in the app, and each signal tells you what to buy, how much to buy, so how much to allocate, so the word for that is allocation, why you should buy it, so there is an analysis with financials or technicals or comparison with competitors, and it explains more or less also with a view why now is the right time and why it could take off. The analysis tells you also the upside and more or less how long. But so how long is basically when to sell. And there is a sales section that I will cover, but basically there is a target sell date and other things that will help you assess when to sell, right? So now, where to find stock buying signals? Well, there is a signal section. It says signals. And if you go through it, you will see analysis, notes, options. Then you will see the stock, which industry it belongs to, the market cap, so you know the size of the company, the who is holding it. And this helps because based on who is holding it, you have all kind of strategies that will behave differently. Like a stock with high retail ownership will tend to go up right after a good earnings release, but a stock with with high institutional ownership will go down actually right after a good earnings. So like there will be some profit taking. It doesn't behave the same way. Like there is some hype versus profit taking. Anyways, let's keep on. So it tells you when it's been sent, and here also there is a section that tells you how to trade past signals, but basically ideally you get in right away, but you can also, there are also ways to trade signals that have been sent already. And it's totally fine. And you should not focus only on one stock. You should build a portfolio. So you will trade signals that have been sent already as well. Anyways, then allocation, so how much to buy maximum. This looks at all kind of things, including the market itself, like how much the market has. If it's a SP 500 stock or not, you will see SP 500 allocation. So it will tell you, usually it will be more than SP 500, of course. because we are like long. We're trying to be long only, so like buy mostly, not short. Anyways, let's keep the details. And the target sell date, and here again, there is a sell section that I will cover, and it will tell you how to use this. The analysis, while you tap, you get all the information. Notes, same thing. You want to get updates, what has been told, what has been pinned on the feed, what other people are saying about the stock, what others asked, what were the replies, etc. You get the updates in the notes section. And options. So here it's a stock signal. You can trade options on it. And same thing, you tap, you see, it will tell you basically based on your level of risk, what you're looking for, which option you can buy. All right, I'm not doing it because I don't want to make it too complicated now. Let's just go through it. So here you have the signals. For long-term investors, you have a long-term section. Same thing here. You will see more or less, basically you will see the stocks long-term, and you will see also the topics, investment topics. And here it looks nicer on the phone, but basically you have space stocks, quantum computing stocks, nuclear energy, Democrat stocks, Republican stocks, value, growth. I know them by heart, so like I can tell you without even looking at the actual text. And yeah, you can compare with Nasdaq and things. Anyways, so let's go on. And then for day traders, you have the short-term section. And the short-term section, exciting, you get an overview of what the overall market does, because the move of a stock, what is it? It's the market move times the beta of your stock plus the alpha, which is the value added. So all the stocks will move with the market, plus, well, you can make this more complicated. You can decompose it more. Basically, you can say that the move of a stock is the market plus something which relates to the industry, etc. But let's just say it's the market plus things that relate to the stock. Well, here you have the market. You have what the market did historically. Right now we're February, so you could see like usually end of February it dips. Well, it happened now. Sometimes it will happen, sometimes it won't happen. If you play the statistics, and again there is a section that explains how to do it, you can slowly, you can put small amounts and often win. And sometimes it will not happen. Why? Because it's stats. So let's say here I tap the 23 thing. Well, you see some years it's positive, some years it's negative. Here you can check the distribution. Often it's negative, when sometimes it's very negative, but like here, 1 year it's been very positive, plus 1%. So it was a good year. I guess this was a long time ago, but you got the idea. All right. And same thing, you see like early September, well, the market dips. Okay, so like early September, people, they come back from vacation, it dips. They come back from vacation, the new year is starting, their kids go to school, they go back to work, they are tired, etc. The weather is not great, they don't feel good, boom, it dips. End of September again. End of December, you see usually it's a good year, but anyways. Market, then earnings. Earnings here, you see the earnings predictions. They are sorted already, so that's nice. You see the incoming ones coming. In the metrics tab, you can check all the earnings and all the stocks and all the predictions and all kind of things. It's not only prediction, you can check ownership. Sometimes you want to trade maybe retail stocks because they've been doing well and the market is up, sentiment is up. When you like me, I play a lot with it. But again, you don't have to over-worry because everything more or less is in the AI metric. So I will explain also how this works, the AI thing, maybe in another video, because right now I'm going to try to cover the app. But okay, and so this prediction, very quick, it's an odds of beating earnings. So it's exciting because if they beat earnings, usually the stock goes up. But then you have other things that come into account, and that's where things like pre-earnings, earnings content can help. Anyways, I'll take you through it. But basically, Robinhood beat earnings. Coinbase is releasing earnings a week after. And this happened with other things like Goldman Sachs versus Bank of America a week after, or all kind of other stocks that correlate. Well, of course, if the earnings prediction is a bit for Hood, they're going to beat. And then the next week, and then the same day, well, Coinbase is going to go up. Why? Because everyone understood that Coinbase will correlate with Hood, it will go up. So the next day he will come, he will tell me, Anes, I bought Coinbase, earnings prediction was high, they beat, everything is good, it dropped. What happened? I don't understand. Well, I'm telling you what happened. It was priced in a week ago. So when you buy a stock, you have some things to look at. And here I can make a whole other video about earnings. But basically, it's not because it's an upbeat that it will always happen. Okay, so like don't take all your money and throw it in. And there is a section I'm going to cover after. But see, I'm already covering the short-term section. I'm doing, I already went out of what I'm not doing what I was supposed to do. But anyways, there are things like guidance and same thing again. Here guidance, you can learn how to estimate it more or less based on things like what the stock did, what were the guidances for the stocks, what's driving the industry, how the macro indicators moved, etc., etc. Well, anyways, and for the macro things, same thing here. You have a calendar of events. So there is. I'm going to cover it after, but basically here you have all the macro view. Here you have the earnings view. So like earnings is a bit punctual. Then you have the pre-earnings. Why is it interesting? Because pre-earnings, well, see, like Avejo is coming soon after NVIDIA. Pre-earnings, especially for retail stocks, if you buy them like 2 weeks ago, often it can deliver pretty well. So you just get in first. But again, there is also the market move. So like when you buy your pre-earnings early, it worked well with Palo Alto Networks, with Reddit. The options went up plus 150% in a week, 2 weeks. It was retail stocks that we bought before earnings, and that's it. And on top of that, there was no dip coming in the market calendar. So this was nice. But if you buy it and you know there is a market dip coming, but same thing, like don't buy 2 weeks ahead of earnings knowing there is a market dip coming, because no matter what, it will dip. All right. Then momentum, hypes and stuff. Okay, bon, here we don't see a lot because I guess they are not. Bon, anyways, here, this is nice post earnings. Basically, you will see stocks that did well post earnings or that failed earnings, and you can assess quick if there is an opportunity to buy the dip or not based on what happened, what was the guidance and the earnings results. And same thing here sometimes, often when there's an earnings upbeat, everything is well and it's not priced in, or like there is a sell-off, you buy and intraday, boom, it goes up. And why? But they did well, the market maybe opened, maybe the whole market opened down, and then other stocks didn't move, and this one, because the news was good, boom, it picked up. And hype is like a nice one. Bon, I like to watch it. It's all the momentum stocks, and it's nice. Like same thing here. Bon, I'm going to give some examples with names, but we bought VNet. VNet momentum stock, boom, it goes up. 1 week plus 40%. All you have to do is ride the wave. So you have like momentum traders who will come and want to ride the wave. See, like you can look at bon, Excel. We bought it also. We kept riding the wave. Bon, right now it's a bit down, but it was more up. And you had stocks. Bon, we don't see them now, but like BBAI showed up here, kind of things. Xpeng right now is like a crazy momentum stock. Actually, when you look at Xpeng, like look at this EPS, I think it's a bit overvalued compared to like things like NIO and all. But like whatever, doesn't matter. There is momentum. People are excited. They buy. And it's trading on interest often, so like prospects and good news. So this is like short-term trading, like don't jump on momentum trade and tell yourself I'm going to hold it 1 year. No, most likely it's going to dip. So you have so okay. Here, what did I cover? I covered things for day traders. Okay, you have your short-term section, market, earnings, pre-earnings, post-earnings, essentially, and momentum hypes. You have your long-term session with peaks, and topics. It looks nicer like this. And you have your signals, okay? And then here you have like stocks and options, and you can buy everything. You can just tap for options. Doesn't look that nice on iPad. I use it. Everyone uses it on the phone, but anyways. And nodes, same thing, and here it will load. Bon. And analysis, same thing. You tap and then you see it and you understand. Okay, bon, what's happening? And in the notes you see like analysts are upgrading the stock. price targets are twice higher, the financials are good, etc. There is a dip. You have your dip timer that tells you now it's time to buy, etc. The thing comes up in the signal, up, boom, it gets sent, and that's it. So like there is an optimization function that tells us what's the priority. But anyways, so right, we got this one. Let's go back here because I like it. Okay, then you have how to make predictions. So like you can also check the predictions by stock. And here you go in the metrics tab, you select a stock. Well, I'm not going to take NVIDIA because it broke my heart. Let's take Apple. You take your stock, boom, you tap prediction. You see events coming. You see all kind of things that explain what's happening. And here you don't see it, but on the phone, you see even the factors that contribute to this prediction. Anyways, so you have this. You can ask here directly and you'll get your answer as well in the Ask tab. And it will also show you all kind of details. And I'm not going to show you now because I'm not going to stop. But basically, you can also get the prediction by asking the chatbot. All right? So everything is there. Starter tips, some things, disclosures, and boom. Okay, now exciting, very exciting. You know how to read the signals. And you know more or less what to buy, but you don't know how much you should buy, allocations. You don't know how to understand all these financial metrics because some guys, they want to make the most out of it. So they want to make sure they understand everything and they're not missing on any details so that they can tell me, Anes, I think you're wrong, this should be like this or whatever. Anyway, so like there's a metrics, how to read them. So like you do your own analysis, basically. Then you have the short-term signals that I showed you. Let's go very quick here. But you have the what time horizon. Well, okay, have a look at it. But basically, earnings are, let's say, overnight. This one is 2 weeks ahead of earnings. And this one is right after earnings. And this is like, let's say, 2-3 weeks. Okay? And this is overnight, like you see, it's per day or like per week, based on the window you look at in the calendar. Okay, earnings surprise, this I covered it. Then, what moves the stock price on earnings day? So you have the EPS a bit, whether or not it's going to beat EPS, but then you have also the guidance, and this we're going to add something that explains how to assess it, because it can be assessed. Then you have the revenues, and here it doesn't say it, but something else, which is what others did right before. So like I told you about Coinbase and Robinhood, but same thing with Goldman and Bank of America. Goldman a bit, everyone knows financial industry is going up, and this did it the last 2 quarters. Then other stocks, boom, pick up. Then you come on the earnings day, everything is great, but it doesn't pick up well because it picked up 4 days ago. You know, when the competitor, when it got priced in by the first competitor. And here you can see in the pre-earnings. So like which one is going to release. So here semiconductors, but you can select another one. You see AVGO is releasing in 2 days, Micro in 16 days. Here if I tap, boom, I see also the details. And you can remove them as well. So like see, like right now I'm removing this one, I'm removing this one. I remove this one. Oh, nice. I can zoom in a bit, etc. All right. Well, showing the app. But okay, then you have momentum, which is the hype, distribution of yields, value at risk, stochastic probability, etc. This, I'm going to go through them if you want. Let's look at Intel. I think it shows only on the phone, it doesn't show on iPad, because here when you tap prediction on the phone, you will see it. So I'm not going to go through them now, but basically, just so that you get an idea, distribution of yield tells you, you can see it here. It tells you how are the yields. So like for Apple, you see when it's up or when it's down. Oh yeah, sorry, this one is over time, so you don't see it here. The other one tells you how often each yield happens. So how often it hits high values, how often it hits low values. The VAR tells you what is the 1% max, or it tells you have different VARs, what is the maximum loss that happened in one day, for instance. Things like this, but it's not really like this, it's more like what is the maximum loss you could expect on one day, what is the 1% maximum loss that you could expect in one day. So if you're on the worst case 1%, how much is it? Or if you're on the worst case 5%. And so when you have deep post earnings, you can quickly compare the value at risk. If you see it's like 1%, bon, not always, but usually it means buy the dip. It might mean wait 2 days before buying it, and this I can go through it as well. Anyways, stochastic probability tells you for the stock when the path happened, what was the next value. So like momentum stock, typically, if it's up already, you can look at the history. Often it will tell you, oh, if it's been going up for the past 5 days, for the past 5 days, it will keep on going up. Things like this. Or will it go down? Or if it did up, down, up, what's the next one? And this will tell you. Politician trade, IPO signal, etc. Bon, this I've covered it more or less. You can just read. Basically, you get it's the hype signals, so it's also short term. You will receive them in the AI signals when there is a hype. When the politician trade, usually you buy ASAP. So like Tempest, it went plus 40% overnight. Everyone was scared. Like, Anes, why are you telling me to buy a stock that went up plus 40%? So like, anyways, we bought it. The thing went plus. It went to the moon in the end. We sold too early because we sold after like 5 days. Well, the option did plus 300%. But like, yeah, I'm not going to hold it forever. Like sometimes, of course, you will regret because you will think, Tempest went so much up, I could have made even more money if I held. So cost average. But most of the times when there is a hype, it goes up and then it goes down. Same thing with IPOs. You buy first day, it goes up. Well, after 1 week, it goes down. Normal liquidity, people take their profits, or the short-term traders, and then it goes up again, long-term. Okay, social news peaks, something, okay. Then long-term signals. So here, basically, I'm not going to go through it because right now I thought I would do everything in 10 minutes, which clearly is not the case. But if you look at the financials, I think everyone knows already because on the feed I always cover it this way. I like to cover it this way. Things like P/E ratio, okay. You look at the price to earnings, you compare with the competitors. You can do it in the app. I'm going to show you very quick, but basically, let's take Apple, allez, because we love it. Peers. Okay, so like P/E ratio, see Apple is here. Bon, so like you have all these ones that are overvalued. Strike, nice. Let's remove this one. Bon, I'm losing time, but basically, with SMCI it works better. Let me show you. Actually, I've showed it in the SMCI video. ETF rebalancing. When there is an ETF rebalancing, if, for instance, for Palantir, you can calculate the average volume that's going to hit the stock. What is the indexation on the index that's going to buy the stock? How much they're going to buy, and then you can calculate how many average daily traded volume is going to hit the market, and if it's a high number, you know it's going to impact the stock price. So we did it for Palantir actually, and we knew it would hit it. But then you have other things like short-term hype. Well, anyways, but this is a long-term signal. Then pair trading like Tesla versus Ferrari. You can compare the same thing with Nvidia versus AMD. You can compare the financials and the EPS growth and things like this. Then same thing for Bitcoin. All right, let's move on. Okay, indexation signals. So this is what I talked about earlier when I said Palantir. You can read it. Basically, it's you look at what is the weight? How? Okay, so you have two things. You have the short-term hype, so you know when the S&P, if Standard & Poor's announces that Palantir is going to enter the S&P 500, everyone is going to buy, they're excited. Short-term hype. Then you have long-term effect, which is you look at trading volume, you assess how much the funds are going to buy based on the indexation, and then you compare with the average traded volume of the stock, and you check how many days of traded volume are going to hit the stock. All right, well, this we do it for you. Everything is coded in Python and stuff. Like, don't over worry. You just receive the signal. Options. Options. I'm not going to go through it. There are some videos where I cover the payoffs, but all you have to know is I share my trades. Okay. Please read option cash management, like how you manage it. I'm going to make other videos in the option section. How to cost average options. So everything, the option price moves with the stock price. So you cannot cost average an option by itself. You think about the stock, especially here because we're doing directional trades. And then you think, how would you have cost average that stock? And you check with your option and stuff. Anyways, have a look at it at the onboarding. It's very interesting. And I will cover it with more videos. But all you have to know is here you have an option section, okay, and you have some trades here, all right? Then, let's take a look at this one. Then, macroeconomic events. So, it's basically this section. And here, it tells you what is the CPI, all right? So consumer price index, basically it's a metric that helps assess inflation. It tells you about the Fed meetings, all right? So the Fed meetings, I think now everyone knows, but basically Fed, they talk about interest rate, all kind of things that are related to the economy. They dictate also how they want they think about inflation, etc. They look at the CPI first, then they look at all the other economic factors like unemployment. They look at they assess how is the growth in the economy. All the details are here. I haven't reading. And they then decide what they're going to do with interest rates. Okay, so they decide whether or not they're going to go up. And this affects the whole economy because interest rates means money supply. I'm not going to go through it, but here basically a strategy, and it's covered in this section, is that you can expect volatility. So that's why you see red before each event, and then green. It's not always red and green, but often the red part you will have it. The green part, if everything is fine. But we've had some, actually, it says it in the text, but there are all kind of ways. Honestly, I could spend 2 hours talking. There are all kind of, when you can monitor you can track it live on YouTube, the Fed talk. So you can track live what's being said, and you can assess live more or less if something is going to make the market dip or not. So if you want to be like, if you have a huge book or something, if you really want to trade it live, learn how to watch and read what's being said and see how the market reacts live. If you wait for the news and you hit refresh all the time, usually it's too late. But so you can hedge it. So how can you trade on it? You can buy VIX ahead of the event. All kind of things that are covered here, and you can also compare with what happens historically. You can assess based on the CPI how the market reacted, what's going to happen in the Fed meeting, and and then you have the NFP. So here it's what I talked about, unemployment and all, and same thing. Everything is explained here. how to hedge, how to trade it, etc. Okay, now crypto, enjoy. You can track all kind of features here. Crypto compare followers, Facebook likes, Twitter followers, etc. And you can also compare the social metrics. So you have the social metrics. You can check which crypto has the most Reddit active users. Well, right now it's Bitcoin and then Solana. But then you can also see how it changes over time, and you can compare it with the price. So me, I bought a lot of Solana, so I got lucky. But now I'm not going to say I'm lucky because I didn't sell. So like, and I think everyone knows that the crypto market didn't do as well as the stock market recently. So, but then depends on which stock you talk about, because the ones with high beta, I'm going to cover it, are going to be more sensitive than like defensive stocks. But anyways, so you have some things about crypto. Now I'm tapping the screen. And okay, now the sales signals, I think it's interesting. But before that, corporate actions. You can make money based on corporate actions. Here you receive the signal directly. Okay, dividend announcement, mergers, acquisition, and everything. And often it's also like a hype trade. So like they always behave the same way. And you have hedge fund portfolios, you have some notes and study cases, and you have the link for option for beginners. And now I'm going to finish with the sell signals. So when to sell. So here it explains, but basically, I'm not going to show you, I don't want you to read everything now. Read it directly from your phone. But basically, just like you choose what to buy, in the end, you're the one who can decide when to sell or not. And so it depends on all kinds of factors. First, it depends on how much money you make, what's your wealth, what's the size. Just an example, if you invested, if you hold SMCI and it's 1% of your portfolio, you might want to wait before selling when it goes up. But if you hold SMCI and it's half of your portfolio, most likely, as soon as it's up, you want to start taking profits and start selling, You're not going to hold something that did times 2 if all your portfolio is only this stock. But if it's a small amount, maybe you want to hold and see if it can do times 10, Anyways, so this is about wealth. But then you have all kind of things also. It could be what your portfolio looks like and all. And this is covered here in the onboarding. You have some examples. So please have a look at it. And I didn't go through the allocation section, but there are some explanations about that as well. I'm speaking too fast, honestly. I'm not doing this video very nicely. I'm just trying to get it done quick once, and then I will do other videos, but let's reiterate together. But let's go on, okay? So when to sell? Look at the market yield calendar. So there is the broader market dip, okay? So here it's explained, but basically when there is a market dip, your stocks are going to go down. You can have the best stock in the world. Maybe not all, because they don't all correlate, but when something goes down, when everything goes down, everything goes down. Like crypto went down, stocks went down recently. There is a market dip, it's a market dip. You can't escape it. What you can do is, and it's explained here, you can buy VIX. Okay, so like you're going to be hedged more or less because it will go up when stocks go down. So buy VIX. Buy VIX. Here you see February 15, you could have bought VIX before the red. Anyways, or sell everything if you want, but like if you have a $1 million portfolio, you're not going to sell everything every time and trade like this. Plus, keep in mind that if you hold a stock at least 1 year, you will pay less taxes. It will be 20% tax versus short-term trading. Okay, so like if you've been holding already 6 months, and you can look at the numbers. Like let's say a stock did plus 100%. You keep 80% of this P&L. Now, if it does plus 50, and then it does minus 20, let's say it does plus 50, and then minus 20, and then again plus 80, knowing that you will pay, let's say 40% tax, 35% tax, let's say 40% tax. So if you manage to time it perfectly, the 50 down 30 and up 80, if you keep only the upside perfectly, you got 50 and 80. So bon, let's make it linear. Let's say you made 130. Okay, you made 130, but out of it you add 40% tax. So let's say a bit more than half. So 130 is going to be like 80% as well, more or less. So like you're going to have the same performance more or less if you time it perfectly. Well, if you short, okay, but then what if you don't time it perfectly? So like, don't always over stress about selling if you can hold at least 1 year. If it's more than 1 year and you feel like there is a dip coming, like early September, okay, if you want to sell, but why don't you just buy the VIX, hedge your whole portfolio, and you're done, you know? So anyways, I went out of topic talking about taxes. Well, let's forget that one. Let's go on. Stock-specific sales signals. But okay, so now you have your market thing. Now you want to know for your stock. So you look at the stocks. But here you have a target sale date. So now you're going to ask me, okay, I don't understand what is this. What's this date? So bon, you can click here and see what it says. But it's going to tell you based on the trade, if it's short term or long term, how you can interpret it. So short term you buy ASAP and then you leave. Long term you buy and you more or less hold. And you use this target sale date with your portfolio to understand. Here it says what's the target sale date, when you should sell. So just take it as, if you're on profits, okay, you can take some profits slowly. So start selling slowly. You cost average. But if you're not, but wait, because it takes some time, you know, like something that's 4 months, sometimes you will receive 2 weeks or 1 week. Sometimes you will receive 1 month. 4 months, it's telling you, okay, you can afford to wait. Nothing happens overnight, because this is not, you're not looking after earnings, you're not looking after momentum, you're not looking after post-jump. Here you're looking at something mid-term. So you have short-term, long-term, and you have this thing that can be either short or mid-term. So now you know more or less when to sell. So when to sell? Well, you have the market. You either sell if there's a market dip, or you buy the VIX. You have your stock. You got your signal. It went up 40%, like the momentum stock. But okay, yeah, start selling. But if it's a small position, don't. It's explained here. If it's a huge position, yes, sell. How much should you buy? Look at the allocation. Here it says allocation. But let's go on with the sell. And after that date, start cost averaging. Even if you're down or up, no matter what, if you want to ask me what do I think, you can check the notes, you can look at the financials. Don't hold too long. I'm not going to go through it, but I have so many things I could talk about. I just need to organize it. So let's go on with this. How to set a stop loss. Okay, for this one, maybe I will just cover what's beta. So here you have beta. Sorry. Here you have beta. So beta is the correlation with the market. Stocks like Nvidia, they have, here you have 2 beta, 1.7. But Costco, it has 0.8. And this you see it, like you see that Nvidia's moves are bigger than Costco moves. Or I don't know, like Coca-Cola. Well, just KO. 0.6. So like a stop loss on Nvidia should be higher than a stop loss on Coca-Cola. I think you start sensing it. So this metric can help you assess where to set your stop loss. Just tap and read, but this is where you find the beta. And if you look, you can also, there is a section that explains what's beta. If you're not sure, ask here. Just ask what is beta, boom, you get your explanation right away. You don't even have to wait for me to to say something. And if you're shy and don't want to ask everyone to read, don't be shy because nobody cares. Everyone is happy when there is more content. But if you're in a rush, basically just ask there. Okay. Financials to look at when to sell. Bon. I will very quick show you maybe for Coca-Cola. So the short interest is one I love to look at. So here you see, usually when short interest is high, above 3, so like right now we're not lucky because no one is shorting Coca-Cola. It's Warren Buffett stock and everyone loves it. But for instance, Sound, it was like 12 when we bought it. So like the guys, because, anyways, when it's up, so don't Sound is a bad example because I basically told you that you should look for a squeeze, but it's not the case now. Usually when it's above 3 or when it goes up, it means maybe you should sell. But when it's above 3 and it goes up, so like here, this is normal activity, it's not much. But if you see go from 3 to 8 or to 6 already, it means no, don't buy. Don't buy. Someone knows something or someone wants it to go down. There is something against you. There is someone against you. Anyways. I'm just going to cheat. Oh yeah, NP and EPS. Yeah, but of course, if your PE is going up, you can compare with the peers and over time as well. Actually, I think this one is going up over time. See, but okay, so it's okay. It's not moving too much. It looks like it's moving a lot, but actually, 31 to 20. The whole market is going up. Everything now is a bit is a bit higher, and if you compare, if we look a bit more before, it's not looking too bad. It was already like this before. Okay, so like of course sometimes you have to unzoom. Revenues are up. It's nice. Coca-Cola, everyone likes. Okay. And EPS, EPS, yeah, something. If you AMD, you look at AMD, the EPS is going down, Nvidia is going up. Don't tell me AMD is undervalued because the price is going down. Me, I don't think it's a good stock to buy, but maybe it will change one day. But we are far from there, and it can trade on positive news. It will be a hype. So like you buy the news, you buy the rumor, and then you sell the news. So like 1 week after, you're out. You're not going to hold it forever. Okay. So it's good I looked because I was going to talk earlier about short interest. Then technicals. Technicals I think everyone knows already because it's the easy part usually. RSI tells you if something is overbought or oversold. For technicals is short term. So like for technicals, don't go look 10 years. It makes no sense. Look maybe 3 months. See, like already here it looks okay. It's not overbought, not oversold. For RSI, so everything above 80, like here, it means it's a bit overbought or sold. Anyways, one of them. The regular bars I'm going to skip, but basically RSI and moving average. Moving average, something everyone knows. Basically, if the short-term moving average is above the long one, it means there is momentum. And if it's below, it means the momentum is going. Usually, it means it's going to dip. And you have like support and resistance levels and things like this. But sometimes you can also track historically how it worked, how it moved. Actually, here you can read everything also. You just tap and it tells you. But basically, you follow the momentum. What was I going to say? Oh yeah, and you can also track sometimes. It's not because it's positive that it will always go up. Sometimes when it's too high, it could also mean. So here it's not the case, but you can just compare the stock price with the MACD itself and see how they both relate. But basically, technicals are for short term, and financials are for long term. And earnings are for short term. Momentum is for short term. Everything here. And views, industry views are for long term. Stock PCR is based on financials. Anyways, Okay, almost done. And yeah, so here it says look at midterm. Okay, but look at midterm earnings prediction. So you have, it's what I said now. You have short term, you have all these technicals. Midterm, you have earnings. Long term, you have financials. And long term prediction, you can see them in the app. The prediction button in the matrix tab. Exciting, wait. That's it. I skipped allocations and metrics. So allocations, build your first portfolio, yeah. So you basically you buy some big tech stocks, so you have like safe ground, you know, you're happy. And if you look at Apple, Nvidia, it's 7% of the SP 500 already. It's 15% of the tech sector of the SP 500, XLK. So saying allocate 30% to Apple, Nvidia, and Meta, bon, it's not too bad. Apple, the three together, they already represent 20%. So all we're saying here is be bullish, tech. But with a bit more volatility, because Nvidia is volatile. Meta, I'm very bullish on Meta and on Nvidia. This might change as well, but bon, here it was an example. Now you see you have like all kind of long-term signals that are different. I could talk about Netflix and all as well, but anyways, let's go on. And then you have the idea that you should diversify across industries. So some tech, some biotech, etc. This, it makes common sense. Basically, don't put all your eggs in the same basket. And this can also depend on your job. So if you're a doctor or if you work for Meta, well, if you work for Meta and you're getting RSUs from them, plus you have your job there, so like if Meta doesn't do well, you might also lose your job. It means most likely if you work for Meta, ignore what I said about Meta here. Just tell me, Anes, oh, what should I do? I work for Meta. And I will tell you, oh, great, you have a good job. Maybe you should take some RSUs and put them there. Anyways, and so you diversify. And diversification depends on your job, like what you do for a living. If you're a doctor, you don't have any tech exposure in your life. Your job doesn't correlate. Buy Meta. Okay. Then diversify ownership. And so here it's important you can see ownership. Don't buy only retail stocks, don't buy only institutional stocks. I should have added a whole section about ownership, how it can affect all kind of strategies and your portfolio as well. But see, I'm doing all of this live. I'm telling you, no notes. Well, I guess the notes is the onboarding, but I'm not even really looking at it. And so I will do it. And then 10% for short-term strategies. These ones I like to do them with options because I like to have a bit of leverage on them. But you can do it with stocks as well. And this is like earnings prediction and also like don't come tell me I'm a short-term trader, I'm going to do only earnings. You're a short-term trader, but diversify, don't do only earnings. Wait for some IPO trades, wait for some politician hypes, for some hedge fund hypes, take some momentum stocks. Because if you focus on only one thing, it will not work. And everyone knows that you should diversify across strategies as well, not just industries. So like diversify as much as you can. If you want to buy 5 tech stocks, buy 5 tech stocks, buy one with high retail, one with high institutional holding, buy one more towards AI, one more towards SaaS, buy one with a long-term view and one with a short-term view, and you mix like this and you get your 5 stocks and then you get something proper. If you're going to buy the 5 with high retail, all semiconductors and all with earnings next week, more, you know, like all on earnings, it's not going to go well. You might either get super lucky and tell me, Anes, thank you, I did times 10 in 1 week, or tell me, Anes, I lost everything in 1 week, and there was a dip and the whole thing moved. So like, don't do that. Focus on diversification, and just tell me, Anes, I made plus 30% over the last 2 months, and I'm happy, you know, like with stocks. And I'm very happy because the S&P delivers average 8%, and if I'm lucky 20%, so like it's always better. And this is annual, so like we're talking about 1% to 2% per month. Okay, let's go on. Allocation, and then you have a big portfolio, and you're tired of just holding 30,000 of the same thing that moves by 1%, and you're like, oh, Anes, I'm tired. I want to get some adrenaline and make money the smart way by diversifying on something that can provide me a huge upside with limited downside, and I want to understand how I can diversify this. So like you enter with different times, and that's why like you are not going to see me tell you, okay, these are the 5 best options to buy now. No, you will see me tell you, today you buy this, in 3 days this, in 3 days maybe this one, etc. And you stagger, so you don't get in only in one point. You get in with different entry points, and at the same time you have different maturities, so they don't all end in the same timing. And at the same time you get it on different stocks, so you're diversifying also your stocks and strategies and all. And by doing that, you're going to make sure that over time you will have something that pays a lot and that moves in a more or less safe way. But you're not going to be out as soon as there is a market dip, because otherwise, imagine the situation where you buy everything at the same time, all expiring in 1 week, and all on the same stock. Even if it's not the same stock, if there's a market dip, you're out, because you put all your money right away and it's expiring in 1 week. But if you put a bit every week, okay, maybe there's market dip, some will go out, but then you're going to keep on buying, and you will have bought the dip, and on top of that, some will have a long maturity. So like some won't expire now. Maybe some will be 1 week high leverage, and you'll be like out right away. But other ones that are 3 months, 6 months, no, you'll be fine. No? The small dip, boom, rebound, it bounces back, and you're done. I'm doing a summary of everything in one quick video. But so, okay, you tell me, unless I want some more leverage, boom, go check this. I'm not even going to click on it. Okay, let's do it. But basically it tells you if you have more than 100k invested, you can consider options, and you should not invest more than 10%. So it should be considered as a short-term strategy. Even if you buy leaps that are long-term, don't consider, like, don't allocate it with try to stay reasonable, because even leaps, you still have your time decay. So like you as time goes by, your option value goes down. You don't have that with leverage, but with leverage you don't have the limited downside. There is the option section. Please refer to it. Please read until the end, not only the beginning, until the end. And the beginning is very simple, but anyways. Okay, and the metrics checklist. So this often people ask, oh, I don't know, should I buy this stock or not? And I look at everything. I look at the technicals, I look at the financials, and I will tell you, I tell them, okay, based on the technicals, maybe you should wait more because the ideal entry point would be that price. And this is based on the dynamics. So don't tell me I want to know the price. No, I'm telling you, you have to see also how it moves. So like technical, okay? It's not valuation. And then financials, it's more valuation. So like, what's the long term? So short term, should you get it now or not? Long term, is it undervalued or not? And what's in between? Earnings. So it's always the same, short term, earnings, long term. And it's what we cover here. And it makes so much sense. You look, well, anyways, but earnings is in short term here, but from a valuation perspective, it's not even valuation. If you ask me, should I buy or not, it will be like this. It will be short term, earnings, long term. So matrix checklist. So here I'm looking at EPS, etc., historical P, social hype. Okay, so the beginning is short, is valuation, long term. Then social hype. So this I showed you on the metrics tab. You select a stock and you see it. Wait, where are we right now? Ah, searching. Okay. Ownership data, momentum, etc. Then momentum is for short term actually. So you can see it. You have even a momentum tab, 21 days momentum. You can check momentum stocks here. Social hype, you can check. AMC, still hyped. My God. And then beta and volatility. Well, which ones are volatile or not? Oklo has negative beta. Interesting. So it doesn't move with the market. Opposite ways. But see, like the low beta is like pharmacy, healthcare, anyways. Eli, I'm surprised it's a low beta. Okay, screen through alternatives, most important thing. Okay, so like competitors, peers. EPS growth for Eli is insanely high. No, sorry. For this one is insanely high. 5 years maybe is not the best period. Let's take 2 years. 1 year? Well, how come? Okay, revenues for Lilly, very nice. It goes up. Stock price goes up. It makes sense. And see, this is what you should expect. You expect a line like this, linear line. And like maybe you'll tell me, oh, this one is a bit undervalued and maybe this one is a bit overvalued. Then you can look at profitability, you can look at net income, you can look at all kinds of things. And you can compare the scores. Valuation against something else. Well, here you see this one is the biggest one. High valuation. Let's remove this one. Make it a bit more nice. ABBV, okay, bon, this one I know it. I bought it a long time ago. It's a dividend stock also. Maybe now it has an SP, I'm not sure why. Maybe earnings. Bon, we can go into the details, but yeah, basically compare here. it looks a bit. Okay, I think there must have been a news, so it must be trading on some news or something. But I think maybe dividend guys they love it, so they buy. Midterm earnings predictions, long-term predictions. So if you want to know when to buy a stock, usually this is what I look at. I look at everything. Competitors, financials, technicals, earnings predictions. That's it. Like you know everything. I mean, I don't know. Now you're going to ask me. I want you to go more into details. I didn't understand what you said about technicals. You went too fast. I didn't understand what you said about this beta thing, or I didn't understand when to buy the dip, or how your AI works. Okay, just let's say. Okay, I'm going to do very quick one example for when to buy the dip. I'm talking about this one because I posted it on LinkedIn just to see people's reactions. Everyone was asking, oh, should I buy? But you can't buy all the dips. Huh? Like if it goes down 5% every day and you buy every time, you're not going to have cash left and it's going to keep on going down maybe. But if you wait and it goes up plus 20% and that's it, the dip is done, you're not going to buy too late either. So it's always nice to be able to time. So okay, you can cost average, but if you can time, why not? One thing you can look at first is the valuation. So high companies, you can buy maybe 20% dip. Companies with high valuation, big companies. Small companies, you're not going to buy 20% dip. It's a small company, so the valuation, the stock is going to be volatile. So we'll buy maybe the dip at minus 60%. So for big company, 500 billion market cap, you will buy the dip at minus 20. But for small company, tiny small cap, like a $1 billion market cap, you're going to buy at minus 60. Minus 20, minus 60. 500 billion market cap, $1 billion market cap. So you have your thing, okay? You have your values like this. It's one line. It's one line. But then it becomes a matrix if you look at beta. Beta, it's this metric I showed you here. It's the correlation with the market. So like Nvidia, okay, has a big valuation, but it has a big beta. So it's not going to be minus 20 for Nvidia, maybe it will be minus 30. And so it will become a matrix. You will have, based on the valuation and the beta, you will have all kind of values when to buy the dip. For Nvidia, it will be minus 30 large cap. Maybe another one will be minus 60 small cap, and one will be large cap with a very low beta, and this one, like Coca-Cola, and Coca-Cola will not be minus 20, not minus 30, it will be minus 10. So you have a matrix. And then you have maybe the maximum dip that happened in the past for your stock. So a stock that dipped already, even if it's a large cap by 60%, you will tell me maybe it has more chances to dip bigger than a stock that never dipped more than 5%. So the maximum drawdown. And then it becomes a three-dimensional space. So it's like a surface, like something like this, you know. And then you have more dimensions. You're going to have did the hedge fund buy it recently? Is there news on the stock? Are earnings coming soon or not? Because maybe it will correct more or less. If there are earnings coming soon, maybe there is potential for the stock to go up, even if there is a market dip. You will have how did it perform recently? Did it perform super well or not? So this is the feature we put. If the stock took plus 60% last month, well, you're not going to buy the dip at minus 10, you know, like wait. But if it took only 5% the whole month, maybe you want to buy the dip at minus 10. So like you see, there is an imbalance between, and this you can visualize it when you look at the stock price, and it can be turned into numbers. It's easy. You just when you visualize, you see it go up, and the number is just you add one feature, which is the move over 1 month, over 2 months, etc. Anyways, and then you get a huge space that you can't really visualize. Actually, there are techniques to visualize spaces with more than 3 dimensions. How they do it, they use colors as well, or like stuff, and also you can try to visualize. But let's say you can't visualize it, okay? There's another way to visualize, and this is something that we use. It's PCA, so like everyone who did math knows it more or less. Basically, you reduce your space to 3 dimensions, and then you will tell me, Anes, I want to understand why your earning prediction here is 25, and I will tell you this is the odds and not the actual prediction. Why? Because there are some things here that I can't really understand because there has been some reduction in the space. So I can't just look and tell you exactly what's happening. But most of the time you understand more or less with macro, mesoeconomics and stuff. But anyways, so you have a lot of features, and then you reduce your space, and in the end, you can you can visualize or get something that tells you basically for a stock what's the optimal time to buy. And so why am I saying that? Because everything in the end can be assessed by a human. So like we do it ourselves, you do it yourself, I do it for you, anyways, doesn't matter. Or by I want to say by an AI, but basically an easy way to say it would be by math. So like it's all numbers. Even something that's visual, you can turn it into a number, and then you can reduce your space if it's too many numbers and make it more simple. And then when it's simple, well, that's it. Here you have one number. What else do you want? It's one number. I'm not talking about 3 dimensions. It's like literally one. And then something I realized also is that you have all kind of people. So like some people, they want it simple. Man, like I don't know why you're showing me all this. I just want to know what to buy. But here you have it. But some people are like, dude, you're telling me what to buy this, but I want to know everything. I want to know more than everything you can show me. Okay, but here, I'm going to give you more numbers if you want. And it's like transparency as well, so it makes sense. Like you want to understand a bit. You want to be able to visualize more. Anyways, me, I like it because I can quickly do everything in this app. So something like if you ask me on Instagram, what stock should I buy? Like the guy who asked me this, I want to tell him, dude, you didn't understand anything. Because I'm going to have a guy who will come, bro, I have $10,000, I want to invest, what stock should I buy? Okay, you're going to buy one stock, put all your money in it, so you're screwing with all the diversification benefits and everything, and then you're not going to know when to sell. So like you have one guy who, when I see in the comment, I swear it breaks my heart. Huh? Like I don't want to sound like I get why people say it because they see, oh, this stock went up, and like I'm the first one to write it, like. But the truth is that if I told someone on Instagram, if someone asks me what should I buy, I can't. There is no way. The comment is limited to 200 characters. I don't know how many, but anyways, there is no way I put the whole onboarding in there, and the guy is going to get the onboarding in the face and not understand. But here you can look at the signals. It's more simple. Okay, what should I buy? I'm going to check the last 5 signals and buy them. I have my allocations. I know more or less when to sell, and that's it. I get my date. I know that if I make plus 30% before, I will maybe sell 1/3. If not, I will hold until the date, and then I will cost average slowly 20% sell every month. That's it. Bon. 5-6 months, the position is closed. If you're not sure, you check the notes, or you ask me. That's it. Easy. Like it's easy what to buy. But the guy, I'm not going to tell someone buy these 6 stocks, put these allocations for each, and check this target sell date for each, and then he's going to ask me what happened with this stock, why. Like I can't even show you the financials. Here on the social, I put the financials, everything. You look right away here, it's so nice. I put you have the financials, you see what happens, you check your signal when to ascend and all, you get your predictions. If you ask a question, I can even share directly with you the onboarding, and I can share other posts and search by tickers and stuff. So like I know what's being said. I know I check. This is like so beautiful for me. I know that no one really cares about the social. Everyone wants the signals, but for me this social is super powerful because I can show you the signals. I can show you when to sell stuff. I can share knowledge from the onboarding. I can link other posts, etc. Bon, I'm going to start repeating myself, but for me this is very, very powerful, and there is no way I do that on any other social platform. There is no way. Like I don't even know how I'm going to show something. I don't care. I just want to know the stock. But okay, here I give you Nvidia. What do you do? Oh no, why Nvidia? How much should I buy? When should I sell? Bro, you told me buy Nvidia. It's been 1 day. It's down. Oh, bah no, there's a target sell date in 4 months. We don't care about 1 day. It's not an earnings play. I didn't tell you play earnings on Nvidia. Well, anyways, so like I'm never, and please don't just tell someone like it's not for you. I mean, I don't care. Okay, tell them if you want, but don't tell someone buy this stock, because unless you know that the guy knows about investing. But if it's a guy who never invested and he got $5,000 and he wants to put it all in one bet, I swear someone who just started is going to freak out if something goes -5, he's going to sell. So like buy low, sell high, it's going to become hold if it's up and sell only if you're losing money. So it's going to turn into buy high, sell low. Because that's how the human brain works. If you never did it and don't know what you're doing, your reflex will be to hold anything that's going up and to sell anything that's making you lose money. Why? Because, oh, I'm losing money, I don't like it, I want to get rid of it. Oh, I'm making money, I'm going to keep it with me, I love it. And it's so true. But the real reaction should be, wait, I'm loving it too much. So maybe I'm going to start selling. And I'm not going to sell it all now, I'm just going to sell a bit. Or, oh wait, I'm not feeling good. Let's wait. Oh, already, I'm feeling so bad right now. There is something wrong, I think I should buy even if I don't want to. And I'm just going to buy a bit, just like increase by 20% my allocations, because I feel like, and I swear I feel it like the days where I feel the worst, like I can judge it, you will have it in you. You will have it in you, you will sense, like me, I was selling when everything was all-time high and everyone was getting notifications mid-February, yeah, big profits, Anes, you're awesome. When I hear Anes, you're awesome, it means it's time to sell. Like, it just means there is always small market corrections. I didn't sell, I just trimmed. I sold 10% of my Robinhood. Okay, 10% is nothing. Someone asked me, why are you selling? Do you think it's going to go down? I said, no, I don't think it's going to go down. I'm just trimming because I keep cash in case. And what did I do with my Robinhood? With this 10%? Well, I bought the calls last Friday, so like 2 days ago. So yeah, so it's good, but yeah, I still lost 30% on my 90% left, but it stocks, who cares? Like I'm holding it, you know. You could have bought VIX, etc. Anyways, so yeah, so I'm doing a monologue. Nothing is organized or structured here. I'm talking about something totally different from what I wanted to talk about. But yeah, basically there are a lot of bad habits I see coming, like feeling overconfident, and so it's called greed. Well, everyone knows it. And yeah, for me, this app is powerful for me. For most people, probably just the signal stub is enough. All you have to understand is how to read it. And it's like analysis, notes, options, financials, technicals, earnings, financials, so like short to mid to long, market versus stock, momentum, etc. All the strategies here, but you have much more. You have like IPO and all. We didn't put tabs for them. I'm not going to put. We could. Let's do it. Let's just go through. Let's just go slowly. Wait for everyone to understand what they see, and then put more information. But everything will show up here, anyways. And don't tell me I want 10 now. It's okay if you get them slow. You stagger your entry time. Like what I said, you enter slowly. You mitigate your market risk. You make sure that you're making money the right way and there is no panic. Always keep cash aside, etc. All explained in the onboarding. So yes, I hope you understand. You understood my accent because I spoke way too fast, and I find it very fun. So like, it's cool. Let's do more like this. Right now, I'm not very organized. I have like my Mac and all, but I'm going to get back my desk soon, and I think I'm going to feel more confident about doing more videos and all. And yeah, so thanks for watching. Please like, comment, and subscribe. I always see people say it. Stay tuned. No, how do they say? Tune in for more. Well, I don't know. Anyways, and if you have questions, yeah, ask me in the comments. I receive notifications, so I will check. Maybe I reply right away, or maybe after 1 hour, or maybe after 1 day, or 1 week. I don't know. But I get all the notifications somewhere on YouTube, and then I can just go and check and reply directly from there. So it's actually nicer than Instagram. Instagram, they should do something like this. But Instagram, it's a bit messy anyways. Maybe YouTube will get messy if there are more subscribers. But for now, it's neat, not too much interactions. So I spot each one of them. And yeah. Okay, so this is turning into a monologue. I'm going to stop it here. Thanks for watching again, and let me know which video you want to see first if you have some questions. I'm just giving you some ideas of things to ask. If there is like one thing in particular and it gets a lot of likes, boom, I do this one first. It's going to be more interesting, more interactive this way. Ok? Allez, thank you. Bonne soirée, à très bientôt. Cheers, bye bye.